Hey everybody, hello, my name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today is Monday, ladies and gentlemen, the last trading day of the month of June. Ladies and gentlemen, this is a quick video preview for the webinar, which is going to happen in a few moments, so stick around, do not tune out. We have a short but busy week. We have the US job numbers. The US is going to be closed on Friday, so yes, look, about all this and a little bit more in the webinar, so stay tuned. I hope you'll enjoy this session, and I'll see you in a bit. All right, ladies and gentlemen, hello, and good morning. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com, and today is Monday, ladies and gentlemen, the last trading day of this month. So, the 30th of June. Look, we already mentioned this last week, but I think I'll say it again. You know, what a month we had. I mean, wow. I mean, I wrapped up the whole month last Friday. You can check out that video, that webinar, the Markets Talk. But look, it's a new week in a way. I know it's the last trading day of the month. It would be probably great to have, the last trading day of the month on Friday. Then you can, just wrap up the whole thing and that's it. But okay, look. On one hand, we had a busy month. It was initially the first days of the month were somewhat okay, but then geopolitics kicked in, and we had even a more crazier time with the Iran and Israel conflict. I mean, if you remember, on the 12th, Israel decided to launch some rockets at Iran, and then Iran decided to respond. I mean, well, yeah, and basically it all kicked off, and it was just the markets were not feeling the love in that moment, apart from the safe havens, of course. But look, anyway, before we jump any further, before we go into the charts, we have a busy week. Let's quickly have a read through our risk disclaimer. The content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. I'm going to do my usual good morning in the chat room, everyone. Good morning, everyone. Oh, there we go. So, like I said, the busy week we're having this one, and we do have the U.S. job numbers. We have on Friday the U.S. closed, but then everything is getting shifted onto Thursday. Look. Also, before we jump into the charts, a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. Ladies and gentlemen, Nikkei 225, very quickly. I mean, this one is just on fire. It's enjoying the rally, enjoying the last week's and end of week rally where we saw major U.S. indices kind of reaching all-time highs. I'm talking about NASDAQ and the S&P 500, but I'll get to those in a bit as well. So Japanese Nikkei, yes, rallied nicely. So far, so good. I mean, I talked about this. This was my target, and I said to you that I'm going to aim for this area right here. I'm going to aim for that 40,280 zone tick. And then I said that if we overshoot that, I'm going to aim for that 40,620 territory. Boom! Look at this beautiful movement here. We did overshoot that, but we kind of stalled. So as you can see, the body of the daily candle here is struggling to stay above this hurdle. So it becomes quite an important area to watch. But ladies and gentlemen, let's have a look at the economic calendar first, because I think that this will be the more important part. Now, look, Monday, we already started having some important data. China came out with their NBS manufacturing and non-manufacturing PMI figures. Those came out better than the previous figures. However, still, for example, NBS manufacturing PMI, it is still in contraction. That no good in a way. Then we have the The NBS non-manufacturing, which is kind of still above 50, but is it very far away from that 50 level? No, not really. So in a way, everything is very like tight, very close. So yeah, construction orders in Japan. Look at this year-on-year figures. Boom, dropped to the downside against the previous 52.7. Came out at 14%. Housing starts dropped. I mean, this is not really, the market is not really loving this. And I mean, we can see this clearly. We're seeing a little bit of a retracement back down, a little bit of negativity kicking in for today. In terms of other data, we have Germany releasing some retail sales figures, which kind of are a little bit of a disappointment. Turkey unemployment rate came out a little bit lower. That's fine. So, but in terms of what's happening later on today, we have the European CPI figures, if I'm not mistaken here. So the German CPI inflation numbers, the German inflation numbers coming out is expected to come out a little bit on the higher side, both year on year and month. But that's the preliminary number, by the way, just to let you know. So we could see a little bit of movement there. It will be quite interesting to see if we can actually come out much higher than this, because then this is where the ECB could, start monitoring this very carefully, because again, I understand they monitor the whole European Union, but if Germany starts showing higher inflation numbers, then, for sure, the ECB could slow down the cutting moment. In general, right now, this month, they're expected to go for a rate announcement, and I think that they're not going to do anything. I think that they're just going to chill for now and just going to stay, where they are at their own 2.15 zone, where the interest rate right now is. Look, Dallas Fed manufacturing coming out today, keeping an eye on that one. In terms of other stuff from the US, well, not really, not much, because I think that everything starts from Tuesday. Tuesday, Wednesday, Thursday, ladies and gentlemen, could be quite interesting days. Now look, by the way, Tankan Large Manufacturers Index, this is coming out later on, or actually on early hours of the Tuesday morning, Asian morning, so keep your eyes on that. If you are trading something Japanese related, then yeah, something to keep in mind. Now, in terms of other manufacturing data from China, the Tianjin manufacturing PMI figure, look, again, the same story. We remain still in contraction. If we jump somehow back above 50, okay, then maybe this is where the excitement could come in. But for now, this story here, it's it's a little bit on the negative side. Going further, we have the German unemployment rate coming out on Tuesday. So keep that in mind. Eurozone inflation number. Now that's what we're watching. Now this is what the ECB will be watching as well. At the moment, the expectation is for a little tick up here by 0.1% from plus 1.9 to plus 2%. So there we go. We are, like I said, expecting a little bit of a higher number. If it comes out above 2%, now that's where, again, like I said, it could force the ECB to rethink, the whole cutting moment there. But they're trying to weaken the euro, but it's not really happening at the moment. Like, I think the US dollar is taking the crown on the weakness. That's kind of helping the US right now to make their exports a little bit more on the attractive side. I'll get to the US dollar in a bit as well. I just want to have a quick look at what's happening this week. So yes, Tuesday, like I said, US global manufacturing PMI figure, ISM manufacturing PMI number as well. Keep your eyes on that. At the moment, the ISM manufacturing is in negative territory. The S&P global manufacturing PMI is above 50, so it's an expansion. But I think that the ISM manufacturing PMI has a little bit more credibility, and that's why the market tends to kind of focus on that one. However, the JOLT numbers. So this week we have JOLTS, ADP, and NFP from the US. That's what we're getting. And the JOLTS openings are expected to decline a little bit. So a little bit, we're kind of looking for a better number. Let me just launch the chart here. I need to change this. There we go. So the number has been declined on a nice decline here. However, I'm kind of leaning, towards the upside. I think there could be a shift back up in general. Look, if we somehow start pushing back above 7.5 territory and we stay above that, I think that this is where the market could start getting worried. So if you do, let's say, apply technical analysis on this, then you will see that we have dropped below this key area of support, and which is around the 7.6. And if we do push back above it, then that's where the the interesting bit could come in. But again, it's not like that. It's you don't apply technical analysis on these figures. Anyway, but of course we're monitoring this very carefully, watching the situation with the JOLTS. Going further, Dallas Fed services. There we go. Something to keep in mind as well. But I think that the JOLTS will be the main one. Jumping into Wednesday. European unemployment rate coming out. Yep, so we're keeping a close eye on that as well. Now the number, this is what I like to watch right now, the MBA 30-year mortgage rate. Now, so far we remain close to 7%. Let me just jump into this one. We remain close to 7%. And if somehow, you see, in general, we have jumped recently, and then we stabilized just kind of below 7, around 7, basically. The middle point is somewhere around 7%. So we jumped. So the thing is that, again, looking at this picture, I don't know if we're gonna drop unless the interest rates start dropping. The Federal Reserve starts cutting rates, and to be honest, this is the topic number one right now. The renewed attacks on Powell, and this is what I talked about on Friday. You can watch the videos either on YouTube or on TradingView on our channels, and yep, I discussed this issue. Look, I think that eventually the Fed will be pressured into lowering rates. I mean, at the moment, what do we have here? A little update is needed. So at the moment we are seeing this 19% for a probability of 19% probability for a cut in July, but I think September, that's when the bigger expectation is that the Fed will cut rates, and yeah, that's happening in September. Let's see, of course. Let's see if they're not going to be pressured to cut in July. Anyway, so yes, we're watching this rate. I mean, in general, look, I mean, if you're getting a mortgage and your rate is there, so maybe it's convenient, maybe it's not, but I think that everybody would love to have a lower number, but of course, for that we need to see the Fed cutting rates. ADP, this is something that we're watching this week on Wednesday. Look, the forecast is for a higher number. That's great. We're expecting almost double the number, but hey, that was the major drop. This was the COVID period, and I mean, honestly, look at this. This is just ridiculous. Look, I think that at some point it will push back up, but at the moment it's struggling. And the most important, as long as it doesn't fall below 0, and it can, but yeah, if it doesn't fall below 0, I think that's what the market will be happy about at this point. I think that nobody already is expecting much higher numbers or something closer maybe to 300,000 K or something like that. That's, yeah, but I think that the market will be happy if the number just doesn't fall below 0. I mean, I know it's maybe sad to hear, but that's the thing that the market is for now is like that. So in terms of other data on this week, on Wednesday we get the let me just have a look. The S&P from Australia, the S&P Global Composite and Services PMI figures, right? So something to keep in mind. But then Thursday, the last kind of trading day for the US, other markets will be open, of course, But for the the last trading day this week, Jibun Bank we'll get the Japanese Jibun Bank Services and Commodities PMIs. Yep. Trade balance from Australia, the BOJ Takada speech. Now, the Chinese Tianjin Composite and Services PMIs are also on the watch, so we'll keep a close eye on that one. This, Swiss inflation number, German inflation numbers, as I can see here. German new car registration is something to keep in mind. Yep, and then of course, yes, the main focus, NFPs, non-farm payrolls from from the US. The expectation is for a lower number, going from 139K to 110. Look, I will say this way, like, I'm going to still do a show on Friday, don't get me wrong, because again, you know, we're not celebrating that, but this is what I'm looking at here. Let me just get rid of that noise yeah. So in general, okay, it would be nice to see a higher number. However, the same story. Right now, the trajectory is kind of more towards the downside. And in general, as long as we stay above zero, I think the market will appreciate that. And, you know, it still could be seen as somewhat of a positive thing. Although, to me, this indication, look, it's clearly a slowing down moment, slowing down economy, a slowing down labor market. So previously, when was that, like last year? No, not last year, 2021 here, for example, we were, you know, almost at 1 million here. Then it started declining. 2023 we were roughly around like 200, 300. 2024 around, like I said, yeah, around 200. But now we're kind of, you know, if we get somehow above 200, I think that would be spectacular. So at the moment, it seems like that we are on this trajectory to the downside, and our expectations are dropping. So the market really kind of gets happy about if the number jumps back above 200. At the moment, we're not seeing that. So, you know, this is, like I said, this is very, very interesting to watch how our, you know, expectations are shifting a little bit. And before, you know, if we would be like around 500K, and there's like, okay, that's about right, that's about normal, you know. And now, like, we're barely can, you know, stay above 100, then what should I say? It's an interesting period that we're living through. So, ladies and gentlemen, so let's have a look at the, again, in this indices here. So Nikkei, look, I'll say it straight away. If we push above the 40,620 territory, I'm going to go higher. That's simple. That's it. If we're looking for some lower levels on this one, I think that this is where a few adjustments have to be made. First of all, let me tidy up the chart. I don't want to remove all the levels here. I just want to remove a few. So if we're looking for some, let me just put a magnet here. If we're looking for some lower areas right now, well, I think that the better option right now is to wait for a drop, maybe back below the 40,280 territory. And then we could consider a little bit of a larger correction back down. I'm saying correction because let's not forget that we are still above this upside line. Let me just show you what I'm talking about. So either it's this one drawn from the lowest point of April all the way here, so it's still a steep upside line, or maybe it's actually not this. Maybe we could just, you know, draw this one right there and stick to it. So this upside line right here, taken from the low of the 23rd of May. If we stay somewhere above this, or in general, I would say if we stay above the downside line, still there is a chance for a rebound. So in a way, in other words, that any move up until this downside line, where this downside line could act as a good area of support, we could still see overall the trend to the upside. But if we start falling below this upside line, below the crossroads of these two trend lines, then yes, I'm going to lean a little bit more towards the downside. China. Now, China. Okay, so far so good. I talked about this last week, so I said that I'm going to lean a little bit more towards the downside. My upside scenario will be on a break above the 13,800 territory right there, the highlighted zone. So if we can get a nice clearance of that one, great. I'm going to go higher. At the moment, I'm not going to go higher. However, I remain cautiously bullish. because there are still, you know, some potential areas for a rebound. But if we start clearing this slightly flatter upside line taken from the low the 30th of April, then at the same time we could fall below the 50 and the 100-day EMA, and this is where, you know, I'll get a little bit more excited with the downside maybe, but well, aiming for the 200-day EMA, right? And then we'll go from there. So if we do clear this, then wonderful, you know, further declines are possible, but at the moment I'm not really getting very much bearish. I'm not. No. At the moment I'm cautiously bullish. Let's jump into the US. NASDAQ, Dow Jones Industrial Average. So far, so good. Look, if you remember, if you watched my shows last week, I kept on saying I am bullish. I am bullish because, I mean, I think that these top three indices could could go higher, especially with okay, Nasdaq was the first one to hit all-time highs. Great, wonderful. The S&P 500, I said it will catch up, and you know, it will also hit that new all-time high. There we go, we hit that. So if we follow the logic of every index needs to hit the all-time, every index from the top three US ones has to hit the all-time high. So that means that Dow Jones Industrial Average has around, you know, that much left. Well, on Friday, we were still here, and I said, look, with 3.41, you know, on Wednesday, sorry, when I was covering this, I mean, we were around here, and I said that, look, if we do stay above this territory, above this highlighted zone, which is by the way the neckline of the possible complex inverted head and shoulders pattern. There we go. I said that if we clear this, I'm going to go higher, and we had like around 4%, you know, left until we reach the current all-time high. Now, from here, we only have around 2%. So there we go. So far, so good. So what I'm thinking here is that if everybody reached the all-time high, I think Dow needs to reach it as well. If Dow does not reach the all-time high, like the S&P and Nasdaq, then to me that's a worrying sign. That means that industrials are actually suffering. Industrials cannot keep the pace and are losing demand, and you know, this is where the market could, like I said, interpret it in a very negative way. So what I'm doing right now, I'm just carefully watching this one. So if we believe that this will go even more to the upside, Dow Jones will follow, you know, towards the all-time high. We need another 2%. So doable, yes, doable. So that means these indices, the S&Ps and your S&Ps, your Nasdaqs, will, you know, another 2% here, roughly. I'm not talking about, you know, exactly like this, but roughly that's something where around let me just say 6,000 kind of 340, something like that ish zone. Yeah, I mean, so in you know, about 6,300, above that maybe. That's where the next target could be for the S&P 500. For the Nasdaq, another 2% from where it is right now. That's like leading it toward slightly above the psychological 23,000 zone. So keep that in mind. At the moment, we're nicely below that, but the 23,000, I think, could be quite doable for Nasdaq. Let's see if that's going to be the case. And again, we're going to be very carefully watching the job numbers. If all the JOLTS, ADPs, and NFPs come out nicely on the positive side, then great, wonderful. You know, this could be supporting. This could be supporting the economy here. And again, like I said, let's put it this way. If it comes out better than the forecast, then yes, that's where we could see the positivity. So jumping into the US dollar very quickly. So far, so good. I said I'm going to be bearish. I'm going to be bearish. And I think that more downside could come here. You know, I'm looking at this, and to be honest, I think I'm loving, and I said that last week, I'm loving the 95 zone, somewhere around there. You know, like it's It's a nice psychological level. We remain below the 100, so if we continue to trade below the 100 zone, then hey, why not to reach that 95 zone? You know, it's also a nice, beautiful number, and the market does love beautiful numbers, to be honest. And if we do want to justify that number, the beautiful number, we can look at the history here, and we'll see that back in 2022, the beginning of 2022. February, January here, these are the levels that we have reached, the 95.12 and the 94.59. Oh, just a second. Let me just, why is this like this? Let me just take a look. Okay. Let me just change this. There we go. So that's why for me right now, the 95 territory looks quite attractive. The reason why I'm aiming there, and I think that we are not done with the weakness of the US dollar. I think that there could be more downside here. Again, because we need to make, they need to make US goods cheaper for the outside world, and it needs to be shown. They need to show basically that. That it's quite good, to open and establish factories in the U.S., and that's where it all kind of plays out nicely this way. So that's why for that you need a cheaper dollar. For that you need to see other currencies stronger than your U.S. dollar, and yes, you're kind of damaging a little bit the domestic consumer. But who like who cares, right? I mean, this is the normal political way. Who cares? As long as mission is accomplished, and the moment the mission is to increase production and productivity in the U.S. For that you need a cheaper dollar. They justify with this by saying that the more jobs could be created. Look, U.S. is a consumer nation, and they do a lot of consumption, and I don't know if they have the capabilities of that. I mean, okay, maybe they do, but let's see. Of course, time will tell. But at the moment, from let's say short-term perspective, I'm still leaning towards the downside on U.S. dollar. The German index DAX looking good here. Yes, there we go. Just adjust this very quickly, auto. Look, mission accomplished, I would say. All my Fibonacci's worked out nicely. Even the 79% one worked out. Look at this, boom. Fantastic test here. I mean, let me just have a look at this one. This is the main index, so we opened a little bit lower. We gapped to the upside, but we're now drifting a little bit lower. It seems like we're filling the gap. But I would say this way, that as long as we stay, somewhere above this 23,740 zone, I will continue targeting the upside. And if we do clear the 24,326 territory, then yes, great, wonderful, more buyers could join in. In general, should we aim for the all-time high? I would say we could, but yeah, for now I'm going to do exactly this. But I'm happy that we popped above the 23,740, because again, this was the area, the level that I was saying to you, that if we do push through it, then I'll consider some higher moves. There we go, we're getting that. Let's jump into the FTSE 100 very quickly. Pushing, we're currently stalling. Actually, we did a nice little retracement from the the highs of when the, like I said, the first Israeli rocket was shot here. We started declining, so now, like I said, we're recovering some of those losses. Probably, I would say 50% of those losses we've already recovered. Now let's see if we can go back to the current all-time high. For that, I need to see a pop of the 8,811 territory. Okay, ladies and gentlemen, let's jump into the Forex world very quickly. AUDUSD, so far so good. We're pushing nicely to the upside here, and yes, we remain inside this pattern. It's a rising veg. It's not really a channel, it's a rising veg. We have a little bit of a squeezing moment here, but the thing is that I think that we're going to go further north. Look, in general, so far, everything is supporting the upside scenario. We're above all the EMAs. We're inside this rising veg pattern. We could go and test the upper side of it, but let's not rush into things. Overall, in general, of course, you would say that rising wedges tend to break to the downside because, again, they are seen as bearish indications. However, the prevailing trend here was to the upside. So I've seen this happening before, where it could then end up popping above, above the upper side of the rising wedge. But anyway, it's a theory. It's the only thing for us is to continue monitoring this one. I mean, again, like we're looking at the upper side. I'm aiming for the upper side of the rising wedge here, and then we'll go from there. The only thing is that I think that this whole move to the upside actually could be part of a larger correction. A larger correction because overall, look at this. We are below this downside line taken from the highest point of 2021. We're still below that, and we're getting closer to it. So in a way, as long as it stays intact, we could still see the overall trend to the downside. But again, for now, the short-term image is more positive than negative. AUDJPY, my beloved one. Look, it's very interesting to watch this one because this is my risk. This is our risk on, risk off monitor, where whenever basically the markets turn positive, we see AUDJPY pushing nicely to the upside because people are abandoning Japanese yen. They're jumping into something a little bit more risky, like a commodity-linked currency, like Australian dollar and New Zealand dollar, and we see AUDJPY in this case pushing higher. But again, at the moment it's struggling. This upside line, it was working initially. Now it's no longer working. I think we need to draw it this way now. I think it will be a little bit more credible. But look, if we do fall below the 100-day EMA, I mean, for me, that's a bearish indication in the market. I think that this is where the markets could, switch tides. But again, and as long as we remain above the upside line, above the 100-day EMA, there is a good chance for this one to actually continue drifting higher. But also to support the upside, we look at the little formation right here. We see a little range, right? Let me just actually grab a box or something like that. There we go. So we see a little range here. We see this little moment. Why is this not like way too? Let me just show this. Right. Okay. So basically, you see that we're in this little area here, this little box, and it's not really, like I said, picture perfect. However, if we are ranging right now, that means we look at the prevailing trend. The prevailing trend was to the upside. That means the greater chance for this one to break out would be to the upside. And that's where my 94.83 territory comes in perfectly. This is what I'm watching still. So if we can get that move, amazing. I will go to the upside. Let's jump into NZD/USD very quickly. This one's looking quite nice. I need a breakout above the 0.6087 in order to consider higher levels. USDJPY very quickly. USDJPY. Okay, we're testing the. We broke back below this downside line, and to be honest, it's no longer needed because we are violating it. So that's why we are not really focusing on it too much. But where we are focusing is the upside line. If we stay above it, then there's a good chance for this one to actually rebound and push back up. But I would prefer actually to wait because I would need to see a push above the 146.28 zone right there, because at the same time we could jump above the 100-day EMA and then we could go from there. So long story short, for now I am leaning towards the upside actually, because we remain above this upside line. So but I'm cautiously bullish, and because I also need to see a push above the 146.28 zone, and then we'll go from there. But if we clear the upside line, I'm leaning a little bit more towards the downside. USDCAD, this one's stuck. I mean, it found support near this 1.3634. I talked about this, so hey, if it remains above this area, then yes, I will continue targeting the upside, or let's say the larger correction to the to the upside, because again, don't forget that we're still below this downside line taken from the highest point of January of this year. And yeah, I mean, this downside line is still intact. USDCHF, beautiful. It continues to slide. I have nothing else to add on this one because, as I said, as I said before, this pair is a good reflection of DXY. So in a way, whatever DXY does, the US dollar index, that's what USDCHF does as well. So far, we're on the right track to the downside, and we're in territories last seen back in 2015, if I'm not mistaken. Yep. So at the moment, like parity, what are you talking about? No, we're very far away. Anyway, jumping into EURUSD very quickly. So beautiful movement to the upside here. So far, so good. We are here. We're near this upper side of the rising channel. So look, what can I say? At the moment, I'm just gonna stick to this idea that while we remain inside the pattern, while in this specific pattern with the upside channel, if we remain inside of it, then the trend remains to the upside. However, occasionally we can see a little bit of a retracement back to the lower side of the rising channel. So this is what I'm considering currently. Maybe a little bit of a retracement, but however, I think I need another rejection from the upper side here, and then I'll consider a retracement back down within the rising channel. EUROJPY, very nice, very approachable here, 170 zone, that's what we're watching. We had a good rate rally already, so maybe somebody might say, but we're late to the game, but maybe we'll see a little bit of a retracement first and then push higher. But still, even if we do see something like that, 170 is our barrier. EURONZD, very quickly, still positive, something like that, so that's great, and so far so good. GBPUSD, yep, we broke above this 1.3632. My next target is the 1.3833 zone, and then we'll go from there. That's what we are gonna do. Very quickly on GBPJPY, actually, it's okay. It's somewhat positive still, so I would say just kind of keep an eye on this upside line. And let's jump into the commodity world, ladies and gentlemen. Gold. Gold is taking the spotlight because, again, it is falling. Now, look, I talked about gold. I talked about gold last week, and I said to you that I am very careful. Actually, a week before that, I also talked about this because I said to you that we are in a formation, or should I say formations, because initially I was saying that, hey, maybe we're inside this ascending triangle pattern. If we do clear one of the sides of it, then I'll consider the next short-term directional move. But what I said also that, that if we do clear the lower side of it, then it opens the door to some lower levels. And in terms of targets, look, if it falls below the 50-day EMA, the next target is the 100-day EMA together with this 3,167.68 zone. Fantastic. So if we continue today to see the index trading below the 50-day EMA, I'm going to continue targeting the downside. Silver is nice, actually. It's stuck, but it's stuck above this 35.45 level. So let's see if we can continue trading above that area. For the upside, I need to see a break above the 37.30 zone, and that's it. So, quick glance at Palladium. So far, so good. Still pushing to the upside. Platinum, yep, trying to move higher. Copper, still, yes, some positivity there because China is back in the game because of the signing of the US-China tariff agreement. And WTI oil. Now, this one's interesting. So, look, I'm bearish on this one. I'm going to say this, but I need to see a drop below the $65 mark. If we can get that move and we can see the body of the daily candle staying below the $65 mark, I am bearish. Yep, pretty much that's it. Honestly, there's not much to say on this one. I was saying before that I'm going to be bearish. We still have oversupply in the world. Demand has been kind of weakened a little bit. Why do you need oil rallying? Only if there is a conflict. We had a moment there, but it faded away. Everything is fixable, right? Jumping into wheat very quickly. So this one's drifting lower. Okay. Okay, this one's below all my EMAs on the daily chart, so it kind of pushes more towards the downside idea. Sugar is doing quite well actually, and so far so good. Very technical, broke above the upper side of the falling channel, and we got that move. So cannot really add anything else. Cotton looking good. We're retracing back down a little bit. So let's see if this 200-day EMA holds. And finally, for dessert, ladies and gentlemen, for dessert, Bitcoin. Bitcoin is, yes, perfect. We almost tested the line, the downside line, but you know what? I'll take it because again, this has been, it's always the area near a level, not the level itself, but the near the level. And we got the, let's say, the test of this downside line. Now I need a clearance of that downside line in order to go higher. At the moment, I'm not getting that, so I'm not gonna really rush into things. For the downside, just maybe a drop back below the 50-day EMA could do the trick here, but still, I think a drop below the 100-day EMA would be a little bit of a better move. Bitcoin Cash. Now, Bitcoin Cash is interesting. It rallied. It had a great move, but the 500 mark somehow seems to be a strong one. Ethereum, it's also looking quite positive. So let's see if we can jump back and stay. The most important, stay above the 200-day EMA, and then we'll go a little bit to the upside maybe. Then Ripple. Ripple had a good move. I talked about this. By the way, if you watched my videos recently on YouTube or TradingView, actually I talked about this little idea on Ripple here. So it looks like a bullish 3 method. Whenever you have the first candle to the strong one to the upside, then the 3 other consecutive candles their bodies are within the body of the first candle, you get a push higher. There we go, boom, we got the move. Now we need a clearance of the EMAs right there, right? Let me just grab this line. So this is what we need right now. So let's keep an eye on this one. Litecoin is testing the downside line. That's great. So if we're gonna clear the downside line and we push above all the EMAs, then yes, great. More buyers could come in. For the downside, to be honest, the drop below the 81 zone could do the trick for a few more bears. Dogecoin is still within the formation, the big formation here, within the it's inside the triangle. This triangle drawn this way. So when we clear one of the sides, then we'll consider the next short-term directional move. Polkadot. Now Polkadot is also nice, but there are rumors that it's a failing company, it's a failing crypto. So yeah, they have like not the best in technology, and that's where the weakness is coming in. However, I think the general market sentiment, the general market positive sentiment, is helping the Polkadot here to move back up here. So I think I said it before, and I keep on saying that this should not be like your investment in a way. Like it should be like more of like a speculative moment here, but again, only if you can afford to enter that position. You can basically you afford to lose. If you don't, then don't go in. Tron, finally, there we go, pushing higher, amazing. What can I say? So far so good, but I would prefer actually to get a clearance above the 0.2786 territory right here, and then we could go from there. Ladies and gentlemen, I'll have to wrap it up here. Thank you very much for watching and listening. I really appreciate your time. So I hope you found this useful, and as always, let me know in the comments what you think. I keep on advocating so that people would jump in with their own questions. So yes, feel free to always ask questions. I'll read them out for everybody, and we'll go from there. So ladies and gentlemen, if nobody has any other question, thank you very much for watching and listening. I really appreciate your time, your views, your likes, your comments, everything. So thank you on that, and I shall see you on Wednesday. Bye bye, everybody.